Hello, friends. Welcome back. Like what we do every time. Again, this time as well, it's going to be a very interesting video for all of you guys. Something which I have, culled out from the, studies which I do regularly on the indices, and I call it as a line of defense for bulls because that's one way to look at since we are into a bull trend for the Bank Nifty index at least as of now. We need to watch what is the major indicator to look at. So at times you look at prices, but most of the other times you also look at a sort of a confirmation from the indicators. And what is that indicator, which I believe is called as a line of defense, especially in these volatile times. Now, before we do, we go ahead, like what we do every time, I would request all of you guys to subscribe to the YouTube channel and ensure that you click on the bell button, because we keep on giving this series of very interesting analysis, something which you've not seen or heard of, at least in terms of the technical parlance. What we did, I think 2 months back on gold, what we did last month on the Nifty IT index, and we were the first one to call out that the Nifty IT index is heading towards a big top, and that top could probably result into at least a 3 to 6 months of consolidation. Just a few videos back, I'd indicated one of the key metal names, and I had given you a complete cutthroat 3D analysis on Tata Steel. So you can watch all these videos and very interesting such videos in the pensive. Today again, we'll discuss on very important factor. Now, the last 3 days have been very difficult for an a short-term trader, because by the time you could probably understand the markets, the markets have a habit of changing its trend. Like what we say, the moment you find the answer, the market changes the question. Yes, the markets have gone through these kind of 3 different days of 3 different reactions. But when you look at it, at the outset, what is that one indicator to watch out for? And today we'll be discussing on that one major indicator, which would add, more beneficial to your kind of trading and your kind of analysis, which you do on the indices. So this is the hourly charts for the Bank Nifty, and I've looked at the last 2 months for the Bank Nifty charts from the September corrections of 25,000 till the time when the Bank Nifty corrected to 20,600ish kind of levels, and from there on when you saw the rally to 24,800. Now this is the typical charts of Bank Nifty. As you can see, I've mapped onto this key moving average. Now, as you can see on the line, look at the importance of this moving average. Now, the moment the index is going through a downward trend, for example, the characteristic and the behavior of this average suggests that this acts as now a resistance. Now, till the time the Bank Nifty index is unable to break past this resistance, you see the Bank Nifty index going through a downward drift. So basically, this acts as like a a line of defense for the bulls to get converted into bears, or for the bears to get converted into bulls. Now, as you can see, there were 1, 2, and 3 attempts towards breaking this major line of hurdle, but on all 3 attempts, even there was a touch and go movement, but net the index failed to cross over that, and then you saw a correction and coming by once again. But the moment you saw the break of this line of defense, and you can see this happened with a gap up opening. So you can understand the importance of taking away a resistance with a gap up opening, which means there is a completely new trend in the making for that particular index. And then from there on, there was just no looking back. The Bank Nifty kept on moving up higher. You saw the index correcting back yet again, coming back to that support trend line. Again, a fantastic touch and go movement over here. You saw the index rallying up again. There was this correction 3 days back on the Bank Nifty as well, almost a down 700 points on an intraday basis. And then the Bank Nifty managed to recover. Again, the index managed to rally from this particular moving average. And this is the third time where we are testing the index today, as we are talking on on the penultimate day towards the October series expiry. So this again becomes a very important level and an indicator to watch out for. Now the question is, bhaiya ye indicator kya hai? What is this indicator all about? So to answer this, let us go back to one very important technical terminology, which I call it as the Fibonacci series. Now, I've been a fan of Fibonacci series. I have followed, so in my GAN training programs, in my ADX training programs, in my normal training programs as well, the retracements, the prices, the indicators, I do ensure that I have some or the other percolation of the Fibonacci series in the indicators which I use. Now, this is the normal series, which I think all of you guys are aware of. The number series follows from 0 to 1. Then you add the previous 2 numbers to get the third number. So it's a very simple logical, mathematical equation over here. One of the indicators which I generally keep a track on for the Fibonacci series is the 89 period moving average. So what I've mapped on on the charts, as you can see that this is the charts for Bank Nifty, and what I've mapped up is an 89 exponential moving average, and this apparently tends to act as very strong set of I would say line of defense for the bulls or the bears, depends on the kind of trend which entails. So now for the Bank Nifty, if the Bank Nifty has to break this trend, it has to show confirmation of a break below this major support level or this major trend line or major indicator level. So if this average gets taken down, then you are calling in for a possible reversal on the indices. Till the index is above these levels, any and every kind of volatile correction, even though it's a sharp intraday sell-off, it tends to get absorbed by the market. So this becomes a very, very important indicator. What does this bring out? This brings out to very important observations. First is that the break of this moving average could result into a possible reversal of trend. We've seen this behavior not just in the last 2 months, but over the last so many period of you tracking the markets on the intraday chart basis. A possibility of that could even result into further correction on the indices, a series of lower highs and lower lows. That's what a typical downtrend could be defined as, is possible. Or else, if the Bank Nifty manages to take support over here, and assumingly if we don't break this level, then there could be a possibility of even a strong turnaround from here on. So I hope you guys like this video, and I would sure that I would probably believe that you guys would probably want to use this 89-day exponential moving average or 89 period exponential moving average on your intraday chart analysis for enhancing your understanding for the markets and especially for the Bank Nifty. I hope you guys liked it. Don't forget to like the video, leave your comment, of course, and do ensure to share as well as subscribe and click on the bell button. So thank you so much for all your love, guys, once again, and do ensure that you subscribe to the channel for more such interesting videos which are lined up ahead. Thank you.